Good evening. I hope you all had a fantastic weekend and start of the week. Today the market was mostly positive, as tech, per usual as of these past few months, continued its nice run. The Dow did fall 0.31% due to a weak day from financials. However, the S&P 500 rose 0.27%, as most stocks ended in the green. As mentioned earlier, big tech had a great day, as the Nasdaq rose a whole 1%. The National Association of Homebuilders / Wells Fargo Housing Market Index jumped 6 points in the month of August, as the index now has a reading of 78. Any reading above the level of 50 is considered to be positive sentiment. The index is now at a record high in its 35-year history, with the previous record being set all the way back in December of 1998. Just in April, the index had a reading of 30 as the economy shut down due to the pandemic. This sentiment is supposedly due to the record low interest rates and increased demand from consumers to move to less urban areas. Sentiment is not expected to fall anytime soon, as rates are not expected to climb, but due to the increased demand, the prices of building materials has increased, which could cause some dampening to the sentiment. Regardless, the market for home builders looks to continue to be strong moving forward. Over the weekend, the FDA granted emergency approval to Yale's coronavirus test that only requires one saliva. On top of not being intrusive, the test only costs $10. Former FDA Director Dr. Scott Gottlieb said that this is a good step in the right direction, as we are currently facing a shortage in the number of tests we have available. He also offered up hope for the future, as he said, quote, "I think we're coming to the point right now that you're going to see a real explosion in testing opportunities, and you're not going to be so dependent on lab-based testing, which has been in short supply." End quote. This explosion in testing opportunities will be due to vaccines reaching the end of the development process. This morning, the Trump administration announced that they would be further tightening the restrictions against Chinese tech company Huawei. The Commerce Department's actions are aimed at preventing Huawei from obtaining semiconductors without a special license. This includes chips made by foreign firms that have been developed or produced with U.S. software or technology. The Commerce Department added 38 Huawei affiliates to their blacklist, which now stands at a total of 152. Recently, the trading volume in the NYSE has tapered off, as the number of shares that were exchanged on Friday was the lowest amount since New Year's Eve of last year. This is not expected to last moving forward as we enter the presidential election, which is set for this November. Regardless, it is something to be aware of. Consumer goods was the strongest sector by far, as it was up more than 1.5%. Basic materials, consumer services, healthcare, and tech all posted gains of more than 0.8%. Financials and oil and gas were the clear losers, as both were down around 0.8%. Growth had a tremendous day as a whole, while core posted mediocre gains, and value as a whole ended the day in the red. The biggest winner in the S&P 500 was L Brands, as shares soared 8.44%. L Brands is a fashion retailer known for the two biggest brands, Victoria's Secret and Bath & Body Works. There is no news regarding L Brands today, but it is worthy to note that they report their second quarter financials on Wednesday. The other winner happened to be General Motors, which is a vehicle manufacturer for brands such as Buick, Cadillac, GMC, and Chevrolet. Shares rose 7.72% after a Deutsche Bank analyst suggested that GM should spin off its electrical vehicle operations, as it would be able to then raise capital at a lower rate and attract better talent. Deutsche maintains its $33 price target and buy rating. The biggest loser in the entire S&P to start the week was American Airlines, as shares fell more than 5%. This move comes after the airlines continue to cut their capacity, as corporate travel continues to be weak and is not projected to return soon, as the airlines eye potential further cuts coming in the fall. The other loser was other travel and leisure stock Carnival Corporation, which is of course the cruise liner. Shares also fell more than 5%, after the company priced a $900 million debt offering. The notes are due in 2027 and have an interest rate of an enormous 9.875%. The debt is intended to be used for general corporate purposes. This evening, we only have one company to cover. However, earnings will ramp up during the middle of the week. Today we have JD.com, ticker symbol JD, which is a Chinese e-commerce company. This morning's earnings were extremely positive on all fronts. The company beat non-GAAP EPS estimates by 12 cents, as it had a gain of 50 cents per share. Revenue totaled $28.5 billion, which topped estimates by a whole $1.2 billion and grew 30.1% on a yearly basis. Not only was this very positive, but they also grew annual active customer counts by 29.9% on a yearly basis. Shares exploded today after these very positive earnings. That is all that I have for tonight. Overall, it was an extremely quiet day, but it looks to ramp up, as big names such as Walmart, Home Depot, and Kohl's are set to report earnings tomorrow. On top of this, the Democratic Party begins their national convention today and will run through Thursday. Thanks for watching. Please leave a like and subscribe if you enjoyed the content. I look forward to seeing you tomorrow.